Hello everyone, welcome back to my channel Medaswi Commerce Classes. So in this today's video we are going to discuss about the 1 mark questions which you can expect it in your financial management chapter. So first we'll move on to the MCQ questions over here. Business finance is needed too. So for what purpose you want to require this business finance? Usually we will require this finance to establish a business, to expand our business and also to run our business also. So the answer is option D, all of the above. For all these purposes we require money in our business, we require finance in our business. Primary aim of financial management. Why you have to manage your finance in your business? What is the major objective of managing your finance in your business? See, usually the major objective is to maximize the wealth of the shareholders. Shareholders' wealth you have to maximize. That is the major objective. That is nothing but wealth maximization is the major objective. So how can you maximize this shareholders' wealth? By increasing the market value of the equity shares, maximizing the market value. So whatever the equity shares are there, if the market value increases, automatically the wealth of the shareholders will also increases. That concept is nothing but wealth maximization concept. So the major objective of the financial management is you have to maximize the shareholders' wealth, that is wealth maximization concept, that is through the maximization of the market value of the equity shares. So again the answer is all of the above. Current assets are those assets which get converted into cash. What do you mean by current assets? Which you can easily convert into cash within a 1 year. That is called current asset. Name the financial decision which relates to disposal of profit. See, disposal is nothing but distribution. So which decision relates to this distribution of profit? See, in your financial management we have to concentrate on 3 decisions. One is investment decision, dividend decision, and another one is your financing decision. What do you mean by investment decision? So whatever the funds which are there in your business, in which assets you are going to invest, that is called investment decision. Okay, what do you mean by financing decision? Whatever the funds you require, see, to invest the money first you require the funds, right? So whatever the funds you require, that funds from which source you are going to take it, that is financing decision. Dividend decision, after earning the profit you have to decide how much part of the profit you have to give it to the shareholders in the form of dividend, and also how much part you have to retain it in your business. That decision is called as your dividend decision. So here what they are telling, the financial decision which relates to disposal of profit, distribution of profits will comes in which decision? That is in the dividend decision. Here you are going to decide how much profit should be distributed to the shareholders in the form of dividend and how much should be retained with you people in the form of retained earnings. So the answer is dividend decision. A decision to acquire a new and modern plant to upgrade an old one is a dash decision. You are upgrading the old one and you are acquiring a new and a modern plant. That is nothing but you are investing the money in your plant, right? In your plant and machinery. So it is investment decision. Next, fill in the blanks. The money required for carrying out the business activities is called dash, business finance. Whatever the money you require to carry out the business activities is called as your business finance. Financial planning is essentially preparation of financial dash of the organization future operation, blueprint. Financial planning is nothing but prior itself you are preparing one blueprint. How should be your financial operations in your future, in your organization. The dash capital refers to investment in fixed assets, that is fixed capital. Investment in dash facilitates smooth day-to-day operation. See, day-to-day in the sense, keep it in your mind, it is nothing but working capital. Working capital is nothing but which includes current assets. So here it is current assets. Dash refers to the mix between the owners and the borrowed fund. If you are mixing owners and the borrowed fund, that is nothing but your capital structure. Capital structure tells you that how much part should be your owner fund and how much part should be your borrowed funds in your business. Match the following. Financial management, as I already told you, financial management, the main concept is wealth maximization. Capital budgeting, see I told you three types of decisions are there: investment decision, dividend decision and financing decision. Investment decision is also called as capital budgeting decision. Keep it in your mind, this is very important. Investment decision is nothing but how you are investing the funds in your different assets. Okay, investment decision can be of short term investment decision or long term investment decision. Short term, which you are going to invest it in your current assets. Long term, which you are going to invest it in your fixed assets. Long term investment decision is also called as a capital budgeting decision. Keep it in your mind. Long term investment decision is also called as capital budgeting decision. So capital budgeting, that is long term investment decision. Current assets minus current liabilities, working capital. Working capital is a difference between the current assets and current liabilities, that is net working capital. Cash and cash equivalents. Cash and cash equivalents are the current assets. What are current assets? Current assets are those assets which you can convert it into a cash within 1 year. Those are called as current assets. Return on investment, that is trading on equity. Next, fill in the blank. Answer in a word or a sentence or in what do you mean by business finance? Business finance is nothing but, as you all know, that what is the money which is required for carrying out the business activities is called as business finance. The money which you require to carry out the business activities. Keep it in your mind. Money required to carry out business activities. Okay, next, state the primary objective. Primary objective, already I told you, wealth maximization or maximizing the wealth of the shareholders. Maximizing shareholders' wealth. Okay, next, what is fixed capital? Fixed capital is nothing but investment in the fixed assets or long-term assets. Investment in fixed or long-term assets. Long-term assets. Give an example for fixed assets: plant and machinery, land and building, plant and machinery or motor vehicles, all those things. What is working capital? Working capital is nothing but the funds which you are invested to meet the day-to-day activities. Funds invested to meet day-to-day activities. Okay, give an example for current assets: debtors, bills receivable, cash and cash equivalents, etc. Give the meaning of current assets. What do you mean by current assets? Current assets is nothing but the assets which can be converted into cash within 1 year. Can be converted into cash within 1 year. Within 1 year you have to write. Give the meaning of current liabilities. The liabilities which you have to pay within 1 year. Pay within 1 year. Current liabilities are the obligations which you have to pay within 1 year. How do you calculate net working capital? Net working capital equals current assets minus current liabilities. What do you mean by financial risk? Financial risk is nothing but It is a position when a company is unable to meet its fixed financial charges. Keep it in your mind. You have to pay some obligations, you have to pay some interest, you have to pay some dividend. If you fail to pay that things, then that situation we are going to call it as financial risk. If you are unable to pay the financial charges, fixed financial charges, position when a company is unable to meet its fixed financial charges like interest, preference dividend, repayment obligations, like that. Okay, what do you mean by flotation cost? What do you mean by flotation cost? Flotation cost is nothing but the cost which you have incurred for issuing the securities for the first time. Like you have to pay some brokerage, you have to pay some underwriting commissions. Those are called as flotation cost. Cost incurred for issuing the securities. Cost incurred for issuing the securities. Okay. Next, a company wants to establish a new unit in which a machinery worth rupees 5 lakh is involved. Identify the type of decision involved in financial management. 3 decisions: investment, financing, dividend. Financing is nothing but the money, what are the sources where you can get the money. Dividend is nothing but the profit we are going to distributing. Anything related to the investment is always an investment decision. Keep it in your mind. Here the company is establishing a new unit. For that they are investing 5 lakhs worth of machinery. So it is investment decision. Investment decision. A decision is taken to distribute the certain part of profit. I told you, distribution of the profit to the shareholders. Which decision it is? Dividend decision. Dividend decision. Okay, I hope you people understood with all the 1 mark questions in your financial management. Next we have left out with only 2 chapters, that is marketing as well as your consumer protection. So within 2 days I am going to upload the 2 chapters also, 1 mark questions. After that we will move on to the next, once I will revise with your 2 mark questions what you have to read, as well as your 4 mark and 8 mark questions in your business studies. Once we complete with the business studies, I will surely start up with your accountancy. Okay, until that, stay tuned to my channel. Take care. Bye bye.